If I was new to trading, I wouldn't waste time learning dozens of candlestick patterns, memorizing strange names, or trying to look smart on a chart. Instead, I would focus on one powerful, simple, and high probability candlestick pattern, the engulfing pattern. Whether bullish or bearish, this single pattern has all the ingredients a new trader needs: clarity, structure, and a strong indication of momentum reversal. In a market flooded with information and overcomplicated systems, simplicity is power, and mastering the engulfing pattern could be your edge. The engulfing candlestick pattern is made up of just two candles. That's it. But these two candles, when used in the right context, can be extremely effective at signaling a shift in direction. A bullish engulfing pattern happens when a small bearish candle is immediately followed by a large bullish candle that completely engulfs the previous one. This suggests that buyers have taken full control. A bearish engulfing pattern is the exact opposite: a small bullish candle followed by a large bearish candle that swallows the first one. That's sellers stepping in with authority. What makes this pattern beautiful for beginners is its visual simplicity and what it represents at the psychological level. It's not just about red and green bars. It's about control changing hands. Now, why is this the only candlestick pattern I'd use as a beginner? Because most new traders fail due to complexity, overanalysis, and lack of confidence. The engulfing pattern helps solve all three. You don't need to memorize names like Morningstar, Three White Soldiers, Dark Cloud Cover, or Doji. Instead, you're watching for a clear, visual shift in momentum. It gives you one clean signal to act on, especially when combined with support and resistance, trend lines, or moving averages. It's not just the pattern, it's the context that gives it power. Let's talk about how to use it properly. First, look for the pattern after a strong move, either up or down. You want to see exhaustion in the trend, and then the engulfing candle stepping in as a sign of reversal. For bullish engulfing patterns, look for them at the bottom of a downtrend, ideally near a support level. For bearish engulfing patterns, spot them at the top of an uptrend, around resistance. When the pattern appears in these zones, it has the highest probability of success. You're not just trading candlesticks in a vacuum, you're trading price action with structure. Next, confirmation. Many traders jump the gun, but with the engulfing pattern, it's better to wait for the pattern to complete and then enter on the break of the engulfing candle's high for bullish or low for bearish. This adds a level of confirmation that protects you from false signals. Your stop loss can be placed just below the pattern for bullish or above it for bearish, giving you a defined risk. This is crucial because risk management is everything in trading. A great pattern with poor risk control still leads to failure. Let's look at an example. Suppose EUR/USD has been falling for several hours and hits a key support level on the 15-minute chart. You see a small red candle, followed by a large green candle that completely engulfs it. This is your signal. Price respected the support level, and buyers are stepping in strongly. You wait for the candle to close, then enter a buy trade when the next candle breaks the high of the engulfing bar. Stop loss goes just below the pattern. That's a textbook bullish engulfing trade, clean, simple, and based on logic, not luck. The beauty of this pattern is that it works across all time frames and markets. Forex, stocks, crypto, indices, all show engulfing patterns. The higher the time frame, the stronger the signal tends to be. On the daily or 4-hour chart, these patterns often lead to major reversals. On the 5-minute or 15-minute chart, they can be used for quick scalps. The key is to align them with market context. Don't trade them in chop or sideways ranges. Look for clean trends, clear support/resistance, and let the pattern confirm the shift. Many traders complicate their charts with 10 indicators and countless patterns. But in reality, success comes from mastering a few high-quality setups. If I had to start from zero again, I would ignore 90% of the noise. I'd pull up a clean chart with price action only, draw key support and resistance zones,